2 days ago, when Bank of Canada announced their third rate cut, everybody in the Liberal Party and the real estate bulls on Twitter were kind of celebrating it as a good news, right? Our dearest finance minister were congratulating Canadians, saying that this is the good thing happened, guys. This means our economic plan is working because we're the first country in G7 to cut rates 3 times, okay? And I made a video and I explained to you guys that this may not be a good news, because if history is a teacher, we have seen that each time the central banks aggressively cut rates, this is always a response towards an economic crisis. And I'm afraid I'm seeing this economic crisis getting deteriorated in Canada. Today, this morning, we saw Stats Canada publish the unemployment data for the month of August. And according to them, the unemployment has gone up to 6.6%, up from 6.4% in the month of July. One thing that shocked me is the demographic distribution. So it's not same for everybody. Okay, so on average, the unemployment in Canada is 6.6%, but the youth unemployment is much higher, 14.5%, which is the highest since 2012. Okay, that means a lot of young people are unemployed in this country, and that number is going up. Ask yourself, if the young guys are not getting employed, what are they going to do? Crimes, drugs? I don't know. Okay, you have to keep the young guys busy with the work. Okay, so that's one thing literally shocked me. And what we have seen in the report was we added 20,000 jobs on net. So we added 66,000 part-time jobs, but we lost 44,000 full-time jobs. So on net, it looks like, yes, we added 20,000 jobs, but basically those are part-time jobs that we added. Okay. Yes, we are adding jobs, but what kind of jobs are we adding? What is the quality of these jobs that is being added in the economy? So that's another thing that shocked me is, yes, we added jobs, but we lost a lot of good quality full-time employment. So on that, it looks good, from a headline perspective, but when we look at under the hood, it's not a good news. Okay, and it could be a better, news if we did not have this explosion of population growth. Okay, so we added 20,000 jobs on net, but we also added 80,000 people in the workforce. So we're adding 4 times more workforce in the economy compared to the jobs we are creating. So if we did not have this exponential population growth, we would have been in a much better position. Okay, but unfortunately, we are exploring the population growth, and it is outpacing the amount of jobs being created in the economy. The trend is not in our favor. Okay, and if you look at the cities, so the big cities are literally leading the charge. Windsor, Edmonton, Toronto, they have the highest amount of unemployment. As you further go down this chart, you can see the smaller cities don't have that high level of unemployment. So ask yourself, is this going to provide a bull scenario for real estate while we are seeing the rate cuts are happening? And it is expected that the rates are going to continue to fall down from here. Okay, maybe we will settle at 3 or 2.5%. Is it going to be bullish for the real estate market when people are worried about their jobs, right? The unemployment is going to 6.6%. And by the way, unemployment rate during the global financial crisis was 8.7%. So yeah, we are not there, but we are inching closer to that level as well. So whoever is telling you that rate cuts is going to be bullish, stay away from them, because things are getting messier here, guys. I'm just giving you an alternative view through this channel so that you understand what's happening in the economy and you can make a better decision in order to protect yourself, what's coming ahead from a financial and economic standpoint. Okay, if you like my content, consider subscribing my Substack, which is the newsletter that I publish on weekly basis. There's a link in the description below. Check it out. And there's some free stuff available in the description as well. Check those links like Quest Trade and Stake, which is basically a fractional ownership real estate platform allowing you to invest into Dubai real estate market. Check it out. Let me know what you think about that. and I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.